the Silicon Valley Bank collapse and the FDIC bailout, the money is going into bonds today, pushing down sharply the 10-year benchmark rate to 3.41%. Now, mortgage rates are also down from where they were last week, and mortgage applications are up 6.5%, according to NPR. That's the buyer side of things, that's the demand, so expect more buyer activity. Now, the Federal Reserve has also decided not to raise interest rates during their next meeting, so the increase that was expected was baked into mortgage rates last week. It's not anymore. Mortgage rates are down. How does this all work? Well, you have to remember that bonds are like a seesaw. When interest rates go up, prices go down. And when interest rates go down, bond prices go up. Now, the problem we've been having is that interests have been on the rise, which means that the value of the bonds that the banks have been sitting on has declined. And if the banks would wait for those bonds to mature, they'd get their money as planned. The problem is when people knock on the door saying, I want my money today, I want my money today, the bank has no cash. And in order to gain that cash, they need to sell off those bonds at a loss. So you're lacking in that loss. Now, the way our banking system is set up, it's those regional banks, the smaller banks that are feeling the pinch, because the big banks have different regulatory reporting requirements, adjusting requirements. Net, the value of their assets, of the bonds that they're holding on to that haven't matured yet, can't be too far off from the true bond price. So there's a lot less volatility, so to speak. The smaller banks don't have that, those regulatory requirements, so they can have that more of a spread. Long story short is interest rates are down, and remember, move-up buyers, first-time buyers, you lock in your interest rate when your offer is accepted, not during the shopping period or the pre-approval period. So keep that in mind, and I'm expecting a lot more buyer activity in the upcoming, I guess, little while here as a reflection of this. We shall see. Thank you so much for watching, and see you next time.